Tuesday, the 27th of June. I'm just waiting for the FTSE 100 to open. So last week on the live trade, what I showed you was a form of what I call defensive trading. Basically what you're doing is you're getting into your trades, you have a management point whereby you're looking to see if the market is going to react. You're going to see some movement against your trade, and then what you're doing is you're just exiting for a very small profit if you see that negative reaction. What that means is that when you're taking trades, you end up having lots of trades with very small profits, some trades with very small losses, and you're looking to catch the trades that just make very strong movements. So you're looking for trades that just do something like this. In this example, it would be the trade that you hold on to and take the market all the way down if you go in, or if you were buying, you would be looking for a trade like this where you buy and it just rockets up very, very strongly. Now this week, what I'm going to show in whatever trade I end up taking is basically closing out partial profits. So looking at the same areas where potentially you're going to see a reaction on your trades, and then closing out partial profits, locking in profits, instead of just holding the entire position and looking for your overall target. What that means is that you're basically taking profit out of the market at sensible areas. It's another kind of defensive way to trade, I would call it, and it can be very, very useful. So what I'm looking at presently is the market has came down and it's touched a couple of times into this zone here. We've then had a very strong move down here, and we seem to be breaking below this area. Now what I'm hoping for is the market to press back up into this level so that I can get short. Now if I see that and I can manage to get short, really the management point for me is going to be somewhere down here around about 7,437. So if I get into a sell position, I see the market coming down, it reaches this level, I'll be looking to close out partial profits, run the remainder of the position down into this zone below. So that's what I'm looking at present. I'm not sure the trade will set up, we will see. I'm basically just looking for the market to spike back up. It's a very similar trade to what I did yesterday actually, although yesterday I was looking for a buy position. So I'm looking for the market to spike up so I can get short, take it down, close partial profits, and then hopefully run the remainder down here. But it depends what the market now does. We'll see how this gets on. If it doesn't set up, then I will just be waiting for another setup throughout the trading day. Okay, the market has just opened. We're just past 8 AM. What we have seen is at 8 AM, the market has spiked up into this whole area right here, which is what I was looking for. Now, with this position, I have taken a blind sell. Now, getting into blind positions, the first thing is I only take blind positions very, very rarely. I'd honestly say maybe 1 in 10 to 15 trades now is a blind entry. And the reason for that is, well, there's a couple of different reasons for that. I have to have early morning analysis that is suggesting something is going to happen on the market. So if I see A, it is likely to lead to B, and then my profit target would likely be C. You don't get those type of setups, or I don't get those type of setups very frequently when I am trading. I usually like to take a more cautious approach, using things like candlestick patterns, breaks of highs, breaks of lows, just to add a couple of confluences. Now, when you're taking blind positions, it's taking those confluences away, and the real danger is there that if you start just taking blind positions, it's a very easy step to fall into emotional trading, because if you're having a bad day, or if you have a bad trade, something like that, it's very easy for you to start saying, okay, well, the market's pushing up into my resistance area, I'm just going to take a blind sell position. You know, it does make sense. I've looked at it on the daily time frame, blah, 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 blah. But in the morning, that was not the case. And what you're doing is you're starting to curve fit your trades because you want to make back your money. I'll only ever take blind positions if lots of things line up together. And as I've mentioned, it doesn't happen very often. Now, another downside to taking blind positions is that most of the time you have to have a larger stop. And you have to have a larger stop because you're taking away those confluences that I mentioned of things like breaks of highs, of lows, of your signal candles. And you're also, you're getting in looking at market reactions. So there's a very high probability that your entry is not going to be perfect and the market is going to move against you somewhat. So you have to have a larger sized stop. Okay, so now we're in the trade. I'm looking for this market to break down. This would be partial profit area at 7,437, as I have mentioned. And then I'm looking to take the remainder of the profits down to this zone below. Now we're having a very strong bullish movement here. There's nothing to say that this market is not just going to continue rallying up and stop me out. My stop's up here. I've used a 20-point stop for this position. Gives the market a little bit of wiggle room, enough room for me to get into an entry and the market to bounce around somewhat. Okay, so let's see how we get on. It's rallying up very, very strongly, but I've given the stop enough room for these types of movements, and I'm still looking after this breakdown, after a break below a couple of swing lows, for the market to make a bearish movement. What I'll do is at the end of the trade also, I'll take you through my higher time frame analysis of what I was looking at on the FTSE in order for me to favor a sell position this morning when I seen this price action. Okay guys, there's a couple of things to look at on this chart now. So the first thing is I just need to keep an eye on this trade also. If we do start to break down, I want to take those partial profits. Okay, so there we go, we're coming down. So partial profits have now been locked in on this trade. What I'm looking at is, or what I was looking at first of all, was this pin bar right here at 8 AM. Now, if I hadn't taken a blind position, this is what I would have been looking for, some sort of a signal to get into the trade. Now, one of the benefits from taking a blind position is that on occasion you can get a better entry into the market than waiting for a signal. Now, if I'd waited for the signal, my entry would have been down here somewhere. And instead it's up here. So what it's done is, it's not drastically different, but it's 3.5 points on the trade. What I'm really looking to do is to get in as the market spikes up and find this area right here. And get in as high to that spike up as possible. Now, it can be very difficult to do. And what happens on some occasions is that you enter into the market blind, you then get a signal candle, and let's say this pin bar had closed up here somewhere, with the low being up here. And I would have got a better entry using that pin bar as my entry signal. That's one of the things with blind buying and selling. You can never tell when you get into that market if you are getting in at the very best possible position. However, for me, on certain occasions, it is worthwhile taking those or weighing up what the market is telling me, looking to see if that blind position makes sense. And today for me, it did. We've now locked in those partial profits down at 7,437. Just looking to see if this market breaks down. Now, what I was also looking at, let me just get rid of these segments, was these lows, or were these lows right here. You can see the market coming down, closing, opening at those levels. It's giving you a little sign that potentially bulls are stepping in. More importantly for me was this spike down right here at 755. Now, when the market came down at 805, it found support at that level once again. So for me, looking at that, it just gave me a little bit of a pause, and it's suggesting that potentially the market was finding support at this zone right here, and potentially the breakdown would fail and we would see a stronger rally back up on the market. Now, what I was looking for were repeated rejections down here after the 8 AM open. So we had one at 805. That gave me, or that put it on my radar, and I started watching. If we started to see further rejections at this level, I likely would have just came out for a small profit or a small loss on the trade. And because if the market is finding strong levels of support, obviously you don't just want to blindly hold on to that sell position. Okay, so we're just waiting now to see if this market does come down to that second take profit level. Anywhere 7,429 and lower really is where I would get out of this trade. Okay guys, so this market has made a bullish movement back up. Now the way the market is actually moving, it's potentially a good way to show you this partial profits, because I have locked in profits down at this level. So now that the market is moving against me, I am considering coming out of this trade. And what the partial profits does, and what one of the benefits is that by locking in your profits at a sensible area, well, first of all, I'm able to give the market more wiggle room. So rather than the market reaching this level and me saying, okay, stops now at break even right here, and the market comes back up and takes you out of that trade at break even, what it allows me to do is lock in profits here. So the trade is in profit, and then you have a small position left to run. So you can allow that position a lot more movement, because even if it starts to move against you, you are still in profit for the trade. And what it can do is it allows you to still, first of all, set your targets down here for the trade, but it allows you to take a lot of your emotions out of the trade, because let's say you have a full position, and let's say you're a beginner, you've not really done a lot of trading, the market comes down, you see this very strong bearish movement, and you think, okay, this trade's perfect. You stick in the trade, but then you start to see these strong movements against you, and you start to see your trade entering into negative. It can be very difficult to hold on to those types of trades, and what you end up doing is you end up getting scared. You don't want to lose your money. You start making decisions based off of that rather than on what the market is telling you, and you basically start to make mistakes. And what you're doing as a trader, you're trying to find ways that make you able to trade effectively. So last week I showed you defensive trading. Defensive trading, as I mentioned, it's really the first way that I started to become profitable when I was learning how to trade. That was the problem for me. I couldn't handle it when the market moved against me. I didn't know what to do. I just started freaking out. I'd freeze, and I would end up just taking a full position loss, when really, I could have got out of those trades earlier. When I was doing my analysis after the trade, I could always see reasons to have gotten out of the trade. And by starting to trade defensively, that took those decisions away from me. I knew exactly what I was doing. So as soon as the market got to certain levels that I had already identified before I started, or before I entered the trade, I knew if I was bringing my stop to break even, I knew if I was taking profit if I seen the market start to move against me, or I knew if I was just holding on to the position. And what it allowed me to do was start making very small profits on a lot of trades, and then catching, maybe let's say one big trade per week, which would bump up the profits overall. Now with partial profits, it's a similar idea. You're locking in profits at that first management point, and it can be beneficial if, let's say, you're not overly confident in the way you read markets. So you're not overly confident that this sell position you took up here, let's just say you took this 8 a.m. candle, you're not overly confident that this is going to cause a stronger breakdown. So what you do is you just identify the first sensible area, and you decide, okay, am I going to be defensive trading? Am I going to look to lock in partial profits? Am I going to bring my stop to break even? Whatever it is that you may do. They're both very, very effective ways and useful tools. As I always mention in these videos, you don't need to just hold on to positions blindly and think, okay, I've entered a trade, I need my 1 to 2 risk to reward, whatever it is that you've read on a forum that says you have to do. It's not the case at all. You are able to trade in different ways. One of the main ways I see people fail is because when they get into a trade, they just hold on to that trade, and they're waiting for 1 to 3 risk to reward, 1 to 2 risk to reward, because they've read in a book that is what they're supposed to do. And if they'd actually, looked at the way they trade, start studying what they do, where they go wrong, they would more than likely find out that looking for those risk to rewards doesn't work for them. And that's not to say that those looking for 1-3 risk to reward is a bad thing. You know, it's a fantastic way to trade also, but you need to make sure the way you are trading fits with your trading psychology. Okay, so we have had rejection up here. I am still happy to hold on to this trade. It's a lot more comfortable when you are trading like this because I've already locked in profits down at this 7,437 level. So I'm happy to give this trade a bit more wiggle room before making a decision to exit. Okay, so on this trade now, basically this 5-minute candle. So we had a rejection tail at 825. This candle now, I really want to see making a strong bearish close because basically what we're doing is we're still testing at these levels right here. You can see we had the bearish close at 810, which has basically turned out to be a false break. It's came down, tested the level. The market has then shot back above. We've seen rejection to the bullish side. The market then breaks down and it does what? It closes back up above this area once again. So really I want to see this candle closing down below these levels for me to stay in this trade. So the market closed through that small area of support at 830, which is exactly what I was looking for. We've then had further bearish candles and we are just coming down toward this target level. As I've mentioned, I closed out partials up at this 7,437 area. I actually closed out 80% of the trade up here. You can see the market then showed the reaction at those levels and spiked up very, very strongly. It's a good trade actually to demonstrate this type of trading because this is exactly the sort of thing where it is, or the sort of time where it is beneficial. You know, when you then see the market reaching this management point where you are, or where you think there's the potential for the market to start moving against you, if you're still in your full position trade and it starts to move up very, very strongly like this, you know, it's very easy to start panicking and jump out of the trade. There's nothing to say also that it won't find this level and then move up against you and stop you out. By locking in those partial profits, you can then either let the market move against you, just closing out that position, so that is the trade completed. Yes, you can let the trade move against you, and you can be relaxed because you still have that profit locked in. If it does come up and stop you out, potentially you're still going to be in profit depending where your stop is, or you're going to have a break-even trade. It also allows you to, when you reach the management point, if you want, just bring your stop up to that break-even level. You've already locked in profits. If the market then moves against you, you get taken out on the remaining, whatever it is, 20% for me at break-even. And then on certain trades, the profits continue to run down and reach your target and increase that profitability on those trades. So it is an effective way to trade. That and defensive trading that I went over last week, you know, they are both very good. I still employ partial profits, certainly, on a lot of my trades for those exact reasons. I don't so much use defensive trading anymore, just because for that to be effective, I found that I had to trade all day and take every setup that I seen. And that is not the way that I like to trade. I am basically, I consider myself the lazy trader. You know, I'm looking for one trade per day and I'm done. And I'm looking to be finished as early as possible also. Okay, so let's quickly go over the reasons for this trade. Now, on the 5-minute time frame, first of all, yesterday, what I went over with subscribers was if we broke above, it was basically this level right here. Just going to mark it in. It was round about here. I can't remember exactly. If we broke above, we could expect a move up on the FTSE 100 to 7,475. That's what we've seen. However, the market then collapsed coming into the close. In overnight trading, so we've created a low, a low. In overnight trading, we create another low. We then bounce up, we come down, we create another low here. So if I mark across from these levels, we're creating the touch, the touch, the touch. The market starts to break down, comes up and tests, it then starts to break down further. It breaks below this zone, which is a resistance area. And then what I went over with subscribers this morning was if we broke below this zone, which we did right here, then the expected move would be down toward this whole section of price action down here. So this support level down here. And that's exactly what we have now seen. Now, if we look at this on the daily time frame, basically what I was looking at was the fact that we came up and we failed first of all. We then had this section of price action, which was lining up with the pin down on the 20th of June. You can see the tail, the spike up here on the 23rd of June. So breaking back below these levels, we'd be breaking a small level of support and resistance. And I would expect the market to come down and then retest the lows. So the close, the open, the close, the open of these candles. And that is exactly what we have now seen. Okay, so that's everything for this week, guys. That is how you can use partial profits, especially if you are a nervous trader and you don't like holding on to positions that start to move against you. As always, I hope that was helpful. I hope you've all had a good trading week. I'm James Orr, and thank you.